Welcome to today's What Will Move the Market show. I'm your host Prem. It's Wednesday, January 21st, 2026, and here is everything you need to know as the markets open for today. Wall Street faced a severe sell-off yesterday, marking its most challenging day in 3 months as geopolitical tensions took center stage. The Dow Jones plummeted almost 900 points, dropping 1.76% to close at 48,488. The S&P 500 slid 2.06%, shedding 143 points to reach 6,797. The tech-heavy Nasdaq bore the brunt of losses, tumbling 2.39% or 561 points to close at 22,954. The culprit behind this bloodbath was President Trump's escalating rhetoric over Greenland, where he threatened fresh tariffs on 8 European nations, including Denmark, Norway, Sweden, France, Germany, the UK, the Netherlands, and Finland. Starting February 1st, these countries face a 10% tariff, escalating to 25% come June, unless they permit a US takeover of Greenland. The market saw a classic risk-off rotation with investors fleeing to safe haven assets like gold and the Japanese yen, while the US dollar weakened and Treasury yields surged to their highest levels since August. Within the tech sector, magnificently valued companies like Nvidia, Alphabet, and Amazon all declined sharply by over 1.1% each, reflecting profit-taking and reduced appetite for growth stocks amid rising uncertainty. Our Indian-American depository receipts took a beating overnight. Infosys fell 2.25% to $18.21. HDFC Bank retreated 0.95% to $32.34. And ICICI Bank led the losses with a 4.44% decline to $29.50. Reliance's GDR also softened, dropping 2.25% to $60.70. For Indian investors tracking these bellwethers, the message is clear. Global uncertainty remains the dominant headwind, and any recovery will hinge on clarity around Trump's tariff policies and geopolitical tensions. In Asia, we're seeing lingering pressure from yesterday's Wall Street carnage. Japan's Nikkei 225 closed at 52,991, reflecting a 1.28% decline as the yen strengthened on safe haven flows. The Hong Kong Hang Seng settled at 26,396, posting a modest 0.27% gain despite regional weakness, while China's Shanghai Composite remained nearly flat, declining just 0.01% to close at 4,715. These mixed signals from Asia suggest some degree of stabilization, though the underlying sentiment remains fragile. Turning to Gift Nifty, the barometer for Indian market sentiment showed early morning weakness at around 25,249, indicating a negative opening bias for domestic equities. This 25,249 level represents a decline from yesterday's close, signaling that the overnight Wall Street rout will likely translate into opening pressure for the Indian market. Traders should watch for a potential bounce from the 25,000 level, which has emerged as a critical support zone, though any rally faces stiff resistance near 25,500. The global backdrop continues to deteriorate as fresh US tariff threats pile pressure on emerging market equities and currencies. Beyond Greenland, Trump's tariff uncertainty creates a domino effect. The rupee weakened to a record low near 91 against the US dollar yesterday, reflecting sustained foreign investor outflows. Foreign portfolio investors have sold approximately 29,135 crore worth of Indian equities in just the first 3 weeks of January, the worst monthly FPI figure since August. This selling pressure has been partially absorbed by domestic retail investors through consistent SIP inflows and mutual fund buying, but the cushion is not infinite. On the positive domestic front, the IMF has revised India's growth forecast upward to 7.3% for fiscal year 2026, from 6.6% previously, citing stronger corporate earnings and robust fourth-quarter momentum. Additionally, the RBI has granted in-principle approval to Japan's Sumitomo Mitsui Banking Corporation to establish a wholly-owned subsidiary in India, signaling confidence in our financial market infrastructure. However, the RBI's latest recognition of FEDI as a self-regulatory organization for foreign exchange dealers and the upcoming Finquiry session today, focusing on fintech consumer protection, suggest cautious regulatory oversight rather than any stimulus push. On the commodity front, crude oil edged higher to $59.68 per barrel, up 0.25%, benefiting from geopolitical supply concerns, while gold surged to $4,811.90 per ounce, up 1.03% as investors flocked to the ultimate safe haven. Silver remained relatively steady at $94.59 per ounce, up just 3 basis points. For traders navigating today's session, the key mindset is defensive selectivity. With Nifty 50 testing critical support at the 25,000 level and Bank Nifty defending the 58,700 to 59,000 zone, look for a bounce if these levels hold, but remain cautious about chasing any rally into the 25,300 to 25,500 resistance band. This is not a day for aggressive long positions or high leverage. Instead, focus on quality names and sectors that have sold off excessively. Stock-specific opportunities may present themselves among FMCG, financial services, and IT names that have seen heavy foreign outflows. The lesson today is clear. In times of external uncertainty, maintain conviction in India's structural growth story while being tactically nimble with intraday positions. Stay tuned for the evening wrap, where we'll track how the domestic session traded against this challenging global backdrop. Send in your questions and subscribe to this podcast to hear US every single day. This is Prem, signing off for now. See you at the closing bell.